Hi, what's up, buddy? Welcome to Richline Insider. We're gonna talk about Foot Locker stock jump over 11% in one day. So we're gonna talk about earning report, what's going on, and my prediction. Do I think Foot Locker's gonna go up, or what would I do? Would I buy more, or hold, or sell? And also we're gonna talk about stock market update. So if this is your first time to Richline Insider, we talk about stock investing, crypto trading, real estate investing. So you can subscribe to our channel so that you don't miss any of our videos. Get free stocks, cryptos, and audibles in the description and comment. So August 23rd, stock market was mostly up. Look at Tesla, up over 3.8%. Amazon up 2%. Microsoft 0.1. So mostly it's all green. Look at the energy. Energy was also green. Financial was also green. Pfizer was up. And most trader stocks, one of them is Pfizer because the FDA approved give approval for the vaccine, so which is good. So which means that there are more people who can get the vaccine, and there could be some vaccine mandate coming. I don't think it's the chances is pretty low, but because of approval, it's possible. It's possible that it's gonna come, and VVOS was one of the top trader stocks today. And it's because their device for the sleep disorder disease was approved by FDA. So once FDA approves a device or medicine or anything, the insurance company can cover. If not, it's going to be experimental treatments. They're not going to pay for it. So a normal, ordinary person could pay a lot of money. So because of approval, so insurance company pay for it. There are a lot of people can take that device, can use that device. So there's going to be a bigger market share, so more revenue for the company. So that's why the stock price was up. Another company was in diabetes, so their drug was approved by FDA as well, so it was up. And SQQQ is a reverse of the S&P 500. So basically, if S&P 500 is up, this is down. So look at the trading volume. So it's a lot, 91.515 million. So Alibaba was down, was up, but because it's a Chinese stock, so recently in the past few months, Chinese stock has been brutal. The Chinese government wanted to regulate the crypto, or wanted to ban the crypto, wanted to regulate the technology companies, and there's a possibility that a lot of the Chinese companies could get delisted from U.S. stock exchange. So that's why they were down as well. So we talk about Foot Locker stock on March 7, 2021. So it was only $42 at the time, and I talk about Foot Locker stock in my stock club since $30 range. So it's now double. Look at the double. It's on August 20th, it jumped over 11%. Because the earnings came out and blew away the expectations. And look at that, it's beautiful. So let's go and look at the chart. Look at this 5-day chart. Look at this. In August 19, it was only 54. It jumped a lot, more than $60 on day high. 52 high, $66.71. So this has a dividend. Pays about 2.04%. Dividend stocks are really good for retirements. You not only, personally, in my opinion, I think we should have dividend plus growth stock portfolio. So if the growth stocks are down, at least we get money from dividend. If you are making $1,000 every month, you are financially free. 1,000, 2,000, whatever the amount that is. You don't need to worry about, hey, if I don't go to the job, I'm not gonna make money. So your life's gonna be much easier. So that's one of the secrets for the dividend income. So I like it. I like this stock. Look at the earnings. Foot Locker earnings were off this wall. Its stock is soaring. Look at the Foot Locker reported adjusted profit of 2.21 per share. So EPS is 2.21. What is the expected EPS? It's $1 per share. So everybody was forecasting this company gonna make $1 profit on every share for every share. So but it's beat the expectation by more than 121 percentage, twice, more than twice. That's crazy. Usually companies beat the earnings by maybe 10 cent, 20 cent, 30 cent, maybe 5%, 10%, but this is like more than 120%. That's a lot. Crazy. And this quarter reflects strong result in our women's and kids footwear business, along with a broad demand for our apparel and accessory offerings, which combined with more limited promotion activity led to the outstanding top and bottom line result. Outstanding top means revenue. Bottom line is a net income. Net income. Like I said on my YouTube video before, a lot of people, students going back to school, and a lot of women are going out to parties and stuff like that. So they are buying, apparels, accessories. So the kids are buying footwear. Footwear says footwear definitely, yeah. So that's why they make money, and this is great. So Foot Locker stock is up 11% at 60.39 pre-market trading. So these results reflect Foot Locker position at the intersection of consumer secular interest in the head, the strength of this branded offering, notably Nike and brand Jordan, and its customer increased purchasing ability due to higher wages and numerous economic policy. So stimulus check, I like it because of stimulus check. Ordinary people, normal people, they just go out and buy stuff. It's only maybe 1% of people gonna save money and invest. Like you and I, and so which is why I like it. I like your own stock. So even if the government give money to the poor people, those money gonna end up in the hands of the rich. So that's why I don't really mind if the government give away the money, because we are benefiting. If you own stocks, if you own real estate, you're gonna be benefiting. Even if the lower class gonna get benefits, in the end you're gonna get money. So this is great. So I like this economic policy. So if more people shops, so more the business, more money the business made, so more people they hire. If more people get jobs, so these people buy more stuff. So the business make more money. So the government gets more tax revenue. So it's all win-win-win situation. So that's good. So let's go back to I talked about Foot Locker stock on June 30th. So wow, I knew the new Nike posted great numbers, so I expect Foot Locker to do the same. So I posted in my stock club numbers, and the Foot Locker stock went up temporarily because of the data variant fear. So any dip in the Foot Locker, I bought it. After I bought it, I sent it to the stock club member, so they knew it. They also bought it as well. So I like Foot Locker. So every time there's a dip, I'm gonna keep buying. So what do I think about Foot Locker? Would I hold? Would I buy more? Or would I sell? So my opinion is back to school and reopenings. Yeah, then this has been playing out as I expected, and management execution has been really well. So even if there are various surge and they have to shut down stores, and Foot Locker has been trying to cut costs by shutting down stores. They have been trying to pivot their online strategy. So this has been working out really well. So I really like it. I really like it. So this is gonna be my long-term dividend hold for me. So I'm gonna keep adding every time there's a dip. I'm gonna keep adding. So long-term. So I'm talking about more than 1 year. So when I talk about long-term, it's not 1 week. It's not 1 month. It's more than 1 year. So online shops, I believe, as long as the management has been executed really well, I have no mind holding this stock for long term. Of course, all investment have risk. You can make a lot of money or lose all your money. Invest only what you can afford to lose. This is not a financial advice to buy this stock. So, but I like it. I'm gonna keep buying for every dip. So, okay. So thank you so much for watching. I will see you in the next video. Bye.